Now it's time for the morning trade, and we look at Target, which got a downgrade this morning. It has earnings next week. Joining me right now, Schwab Network's Marley Kayden, taking a look at the very latest on Target. Good morning, Marley.
Good morning, Nicole. Like you mentioned, they did get a downgrade. Shares down about 1.5% right now on this downgrade from BofA. Bank of America downgraded Target to underperform from neutral. Also lowered their price target down to $93, down from $105, citing what they called deteriorating long-term outlook. Analysts say Target is now underperforming Walmart on a comparable sales compound annual growth rate, and added that digital trends, quote, look very challenged. For Target, July mobile app monthly active users were down more than 4% year over year, compared with Walmart's growth of more than 17%. Bank of America also added that Walmart's online sales growth of between 20 and 25% is also far ahead of Target's 5 to 6% pace. Now, the firm sees increasing longer-term sales and margin risk, giving those slowing digital sales growth, a lack of scale in digital advertising and third-party marketplace. They say there are pricing and merchandising headwinds and increasing competitive threats from Walmart, which I mentioned, and Amazon as well for the reasons behind that downgrade. Tariff exposure is another concern here for Target. Target imports roughly 50% of its cost of goods sold versus Walmart's 33%. So that means, according to BofA, that it would require an 8% average price increase to fully offset those tariffs, while Walmart would only require about a 4% increase. And like you mentioned, Target does report their second quarter earnings next Wednesday, August 20th. As far as what's expected, a year-over-year decline in earnings on lower revenues is what's expected for the quarter that ended July of this year. EPS expected to come in at $2.04 a share. If it comes in around that, it would be a decrease of more than 20% year-over-year. Revenue expected to come in at $24.87 billion, which would be down just over 2% year-over-year, Nicole.
Yeah, understood. I mean, look, Target has faltered. They've had PR issues. Target was the best. It was number one. People loved it. I mean, they always liked Walmart too, but they never left out Target, our guests who come on and pick. And then over the last year or so, they just said Target couldn't get it right, and that Walmart was the key player. And we've seen that. Look, it's down 40% from the highs. The downgrade comes at $93. That's less than where we are now. Shareholders must be particularly upset with this. I mean, Mizuho has a target right now at $94 and a neutral rating. It's just, what is going to be the catalyst to get this thing up and higher, right?
And unfortunately, you mentioned Mizuho, their target came on the note of finding out that Ulta is ending its relationship with Target. They are not going to renew their Ulta Beauty in-store deal that they currently have with Target. They've been in store since 2021. That contract is set to expire in 2026, August of 2026, in fact. But they have decided they've mutually agreed not to renew it. So that will remove Ulta's presence in about 600 Target stores nationwide. But, another huge loss here. And as we look at their earnings history, Nicole, as far as the last 4 quarters, they've only beat EPS 50% of the time, and they've been struggling about 10 quarters of flat or falling sales. So like you said, what is it going to take? Knowing that the tariff impact isn't fully realized, I'm just not sure that this quarter is going to be it for them. After last quarter, they posted a downside surprise of almost 20%.
Understood. Okay. Marley Kayden, great to see you. Thank you so much. Good luck there at Target today ahead of the numbers. And look, all of these have down arrows despite better than expected retail sales, which came in and showed solid growth. So, differentiating story here. How about Dan Deming, managing partner, KKM Financial? You are ready for us to take an example trade and show it to us on Target. Good morning to you.
Good morning, Nicole. As Marley pointed out, some of those targets, that's what I was looking at when I created this trade example this morning as far as price action. I think it's going to struggle based on some of the metrics that you guys were discussing and some of the headwinds. And, but at the same time, it does kick out about a 4% dividend. And I think if we were to get down to that mid to low 90s level, that it might be a little more compelling to pick up the stock at that level for a longer term hold. So today's trade example is selling the September 95 put. You can do it for about $2.30 here versus the stock. So you collect a little over 1.5% over the next month, and waiting to see if you get put in the stock below 95, where intrinsically you would actually buy the stock around 92.70 if this trade was to be in the money on a September expiration. So basically looking to collect some premium, have the opportunity to get put in the stock at a better level.
Yeah, understood. How do you feel about the market action that we're seeing? I mean, we've seen some records today, though market breadth is not 100% clear. I mean, in some cases, you'll have stocks down 2-to-1 and still can hit some records.
Yeah, Nicole, it's you're seeing a lot of movement under the surface here the last couple of weeks. The rotation continues to evolve, and it's getting pushed around by some of these data points. Particularly yesterday, look at the Russell today down almost 80, almost over 0.75%, with the Dow benefiting from the UNH move, and it's up on the day. And actually, the Dow is the one index today that potentially could make a new all-time high if we see it close above that 45,014 level. So, I think you're just seeing the reaction to some of the data points, the expectation of how the Fed's going to interpret this moving forward, and some of the areas that have been so strong going through the earnings cycle are, kind of coming back to earth a little bit. And some of the areas that were oversold in reaction to the earnings and some of the data points, you're seeing, at least for the last couple of days, some of those being bought. So it does, to me, look like there's some shifting of allocations based on some of the stretched metrics within various sectors of the market.
Yeah, are you worried about some sort of sell-off at any point? And if we do have that, would you be buying, saying this is an opportunity?
Yeah, I mean, we are a little cautious about the dynamics in the market as far as some of the price action that you're experiencing, or we are experiencing when you look at various sectors of the market. To us, it looks a little frothy. And again, as George pointed out, I mean, historically, this has been a period of weakness for the market from a seasonal standpoint, and it hasn't necessarily manifested at this point. But there's a lot of things that are going to unfold here in the next couple of weeks as far as the decision, as far as interest rates, some of the data points, and now that we've cleared basically this hurdle of earnings, which was much better than anticipated, so that's what's supporting this market. We're still feeling a little cautious here that the market is a little vulnerable for a pullback. And if it does, though, we do feel that longer term it will be an opportunity.
Yeah. Oh, okay. So buy on the dip. Dan Deming, managing partner, KKM Financial. Great to see you. Thank you so much.